inventory
weighted average.
weighted
Yeah, sir.
average, yeah, periodic weighted average. ಆಮೇಲೆ FIFO, LIFO. Uh, when we talk about FIFO, the objective of all these things is to uh, value ending inventory and corresponding cost of goods sold. That is the main objective in financial reporting. As we spoke earlier, both are important. Any undervaluation, overvaluation, in both cases have a rippling effect on the profitability, and entire financial statements may be misrepresented. So when we talk about FIFO, LIFO, um, okay, we all know what is the acronym stands for. FIFO, first in, first out; LIFO, last in, first out. But what is the real meaning of FIFO? FIFO real meaning is earliest goods purchased are sold first. When earliest, oldest goods purchased are sold first. So that is the real meaning of FIFO. When we talk about LIFO, last in first unit is okay, but the real meaning is latest or new goods which is purchased are sold first. In FIFO, old goods purchased are sold first. In LIFO, latest goods purchased are sold first. So, in a simple way, when we talk about our objective, FIFO, LIFO, when we say FIFO, first goods, oldest goods, earliest goods purchased are sold first, then automatically cost of goods sold means it consists of oldest goods, earliest goods, because we are selling oldest or earliest goods purchased first. So therefore cost of goods sold is matching to the concept of that line. First goods purchased are sold first. There are so many terminology: first goods, oldest goods, earliest goods. So cost of goods sold follows that. Consequently, ending inventory, what is left in the ending inventory, it consists of latest or new goods. When we talk about LIFO, LIFO, what is that assume? Opposite. Last in, first out means latest goods, new goods which are purchased are sold first. So automatically, when we talk about cost of goods sold, it consists of new or latest goods, because that's what the we are doing. We are selling them first. So cost of goods sold is like that, and the opposite is ending inventory. They consist of oldest or earliest. These two things you should keep. So, if we know these tricks, we can solve objective questions. But as far as the theory is concerned, we understood perpetual and periodic system, and both these methods, FIFO, we are in initial cost flow methods, initial measurement, that moving average, weighted average, FIFO, LIFO. When we talk about specifically these two methods of initial valuation of inventory and related cost of goods sold, these two methods suits both perpetual and periodic. The other thing, FIFO, since we are selling first goods purchased or oldest goods purchased first, that means it is actually following um, what we known as actual physical flow of the goods. Actual physical flow related equation like a beginning inventory plus purchases minus sales is equal to ending inventory. So, in letter and spirit, FIFO follows that equation because it's so actual physical flow is followed in FIFO, and in LIFO unfortunately it is not, because in LIFO we are selling the latest goods first. Now, why it is not followed, why it is not applicable in LIFO? In both cases in business, what happens? For sales to happen, purchase and production earlier is a must. So, if you take that view, purchase, production, and sales, FIFO exactly that equation it follows. In LIFO, though earlier purchases and production is ready, the problem is we are selling latest goods first. So, LIFO doesn't follow the actual flow. That is one important takeaway. Now, when we look back FIFO again, because it follows that physical flow, ending inventory remaining is the latest goods, and latest goods approximately matches current replacement cost. If we want to replace, yeah, since it is the latest goods are in the ending inventory, whatever we can say there is a replacement cost for that ending goods, it is okay. So current replacement cost is approximate amount of that ending inventory, we can say. In LIFO we cannot say, because in LIFO ending inventory is old goods. And also another popular thing in FIFO is that current revenue is not matching, because we are selling old goods first and selling price might be different. So you are exactly the one of the disadvantage in FIFO is that it doesn't follow matching principle, because you are selling the oldest goods first. Oldest goods have some cost, and when you are selling cost plus profit, uh, so matching principle of revenues with the current cost is not going to happen in FIFO. but only popular thing is physical flow is there. But popularity of LIFO is that it follows it matches the current revenue with the cost of goods sold. So matching principle here it is there. Here no matching principle. What is matching principle, Sri Lakshmi? Matching principle is current revenue must be um, tied to the costs, right? Hmm?
Yes, sir.
So matching the disadvantage, of course, all methods have pros and cons, but everything is popular with FIFO, but only problem is no matching principle because current revenue is against the cost of goods sold of the earliest items. So there is no matching principle. But if you see LIFO, by this equation only we can understand current revenues are exactly matched against the latest goods. And only advantage I am repeating in FIFO is the physical flow is matched because ending inventory is the latest goods. So the other disadvantage when we talk about LIFO is generally unpopular in the IFRS. Later on we will talk about it, but tell me why LIFO is prohibited in IFRS.
Sir, because it is not consistent according to the matching principle. That is why in IFRS it is prohibited.
Not exactly. What happens in the register is that if at the each time purchases happens in LIFO, when the input prices are rising or during the period of inflation, if you just see ending inventory consisting of oldest goods means in the period of rising prices, LIFO shows a higher cost of goods sold because, for example, you purchased on January 1 $5. In February 15th, it became $7. In March, it became $8. In October, it became $8.5. And by the time you come to the November, December, the cost of the inventory when you were purchasing it has become $9. So during 1 year, from $5 to $9, it becomes cost of goods sold is measured with the latest price because you are having latest goods under that. So your cost of goods sold under LIFO will be higher during the period of rising prices, which is normal. Inflation is normal in the world. So during the period of inflation, cost of goods sold under LIFO will always be higher than when you compare to FIFO. So that means what happened? Um, since cost of goods sold is higher, gross profit will be lower, and you will pay less taxes. When you pay less taxes, uh, that is the one of the biggest problem in LIFO. That is why internationally it is not welcomed. Internationally, governments also don't agree with that, and therefore it is banned. The another reason why it is banned in internationally is that any last minute purchase, let's say you're closing on December 31, Last minute purchase December 29, 29, 30, 31. Since cost of goods sold is having new goods, any last minute purchase directly goes to cost of goods sold, further increasing cost of goods sold, reducing gross profit, and reducing tax liability. These are the two reasons why it is banned in IFRS. Whereas in FIFO, it is popularly followed in internationally as well as in US. So that again that debate will come when we go for subsequent measurement. In America, FIFO is followed, LIFO is followed, weighted average is followed, moving average is followed. Only internationally under IFRS, LIFO is prohibited. LIFO is prohibited due to this worry from political setup also, from tax angle also. It will show highest cost of goods sold compared to FIFO companies. That means companies following FIFO, and gross profit will be less and profit will be less during the period of inflation, which is normal in any country. Inflation is normal. There is no country which is having deflation. So that is one of the biggest reason, and the other reason is last minute purchase, something you purchase on 30, 31st, and you are closing on 31st means directly cost of goods sold contains the latest item, so automatically it will go to the cost of goods sold, and that is further increasing the gross, further increasing cost of goods sold and minimizing the, at the end of the day, tax liability. These are the two reasons. Sri Lakshmi madam, you should explain to students. Got it?
Yes, sir. Sir, I have one doubt. There are some consumer products which in actual life LIFO works for them. For example, cheese, yogurt, and all of those things. The later it is sold, the better it will be.
Yeah,
So
perishable
they will
goods.
usually,
Uh,
yes. So they will usually follow this concept of LIFO. Now, for those products in under IFRS, if it is banned or prohibited to follow LIFO, then doesn't that be a problem for that particular
no, because
consumer?
they follow weighted average internationally for such items.
Okay, weighted average can be followed.
Yes.
Okay, sir.
But you store according to LIFO format. Hmm? For
Yes.
example, you go to the supermarket. Hmm. You go to the supermarket, they store according to the latest purchase, correct? Perishable items. Hmm?
Yes, sir.
Ah, you will pick up latest only, correct?
Yes, sir.
Ah, but that supermarket follows weighted average for such items.
Yeah.
Hmm. Because the old items which is expiry date, they will be removed by anyway. They will be discarded anyway.
Yes, sir.
Good question in the morning.
Thank you, sir.
Sri Lakshmi, I like you for the intelligence. Hmm.
Thank you, sir.
Why Sri Lakshmi? That's it. Hmm. Sri Lakshmi will have a whole world will bow to her later on. Okay. ಬಾಲ ಸರ್ ಮಾತಾಡಿದರೆ ಹಾರ್ಟಿಂದ ಮಾತಾಡ್ತಾರಮ್ಮ.
ಗೊತ್ತು ಸರ್.
ಸುಮ್ಮನೆ ಮಾತಾಡಲ್ಲ ನಾನು.
ಹೌದು.
ಯು ಹ್ಯಾವ್ ಅ ಬ್ಯೂಟಿಫುಲ್ ಕೆರಿಯರ್,
ಥ್ಯಾಂಕ್ ಯು ಸರ್.
ಬ್ಯೂಟಿಫುಲ್ ಲೈಫ್. ಆಮೇಲೆ ನೀನು ವರ್ಲ್ಡೇ ನಿನಗೆ ಬೊಗ್ಗುತ್ತೆ, ಆ ಥರ ಆಗುತ್ತೆ. ನೀನು ಆ ಥರ ಇದೆಯಾ ನೀನು. ಸೊ ನಿನ್ನ ಕ್ವಶನ್ನು ವ್ಯಾಲಿಡ್ ಅದು. ಹಾಗಾದರೆ ನಾವು ಏನು ಮಾಡ್ತಾಯಿದ್ದೀವಿ ಇಂಡ್ಯಾದಲ್ಲೆಲ್ಲ? ಲೀಫೋ ಬ್ಯಾನ್ ಮಾಡಿದರೆ ಕಷ್ಟ ಆಗಲ್ವಾ? ಕರೆಕ್ಟು. ಸೊ ಆ್ಯಸ್ ಫಾರ್ ಆಸ್ ದ ಫಿಸಿಕಲ್ ಥಿಂಗ್ ದೇ ಕನ್ಸರ್ನ್, ಪೆರಿಷಬಲ್ ಗೂಡ್ಸ್ ದೇ ಆರ್ ಸ್ಟೋರ್ಡ್ ಫಸ್ಟ್ ಓನ್ಲಿ, ರೈಟ್? But the company mixes the price and follow weighted average. Weighted average is another super solution for anything, because there is no order, no?
Yes, sir.
Even in vegetable market, fish market, wherever there is perishable goods, strictly speaking, LIFO is correct. Mm.
Yeah.
But only worry is that that cost of goods sold. Cost of goods sold, low tax is the biggest concern. The other thing is last minute purchases will again have a same problem. Mm. Uh, so, popularity of FIFO in IFRS is more. However, you can ask me one more question. If that is the case, why America doesn't bother?
Yeah.
Huh. America is a country that gives management a free hand. Hmm. They don't bother about uh, low tax now, uh, all those things under LIFO. In fact, LIFO is so popular in American companies.
Yeah, sir, and one more thing is there in America, no, sir. If they are using LIFO for financial purposes, then they have compulsion that I think they have to use FIFO itself for tax purposes.
Hmm. That is also correct.
Yeah, so taxes will not be problem for them.
Tax will not be problem for them. Hmm. Accounting purpose they use LIFO. Hmm. And
Yeah.
you see, accounting tax is different and taxable income is different, no?
Yes, sir.
When we go for accounting for income taxes, what we do? Gap income, pre-tax gap income, we are going to reconcile to the taxable income, and then pay taxes on that. Hmm. And yeah, the America actually they don't cry about all these things. Hmm. Internationally, biggest worry, no, international governments. American
Yes.
government and things, IRS and all, they're really, anyway, they go in a cash basis. And in fact, in each country, tax department goes in a cash basis. But as far as the financial statements under US GAAP is concerned, LIFO is more popular there. And also, whether it is perishable goods and all, actually it matches, no? For perishable goods, supermarket, it is most suited is LIFO. Hmm.
Yes, sir.
Because of the expiry date, etc. So in that way, Walmart follows LIFO. Hmm.
Yes, sir.
Walmart is a supermarket giant and one of the big value company. Hmm. So they may end up paying less taxes, etc. The government doesn't bother about it. Hmm. That is the issue there. Hmm. See, it's a capitalistic country, right? Huh?
Yes, sir.
They say more money with the business, they will expand. Hmm. That is why government getting tax is not a priority there.
Yes, sir.
Corporate income tax rate how much in America?
Corporate income tax is less, sir, in America.
Yeah, how much is that? Rate?
Yeah, 21%.
Super Sri Lakshmi, 21%. So that is this Donald Trump still reduced that. Hmm? Now he made it 21%. The idea in capitalistic countries is that let the business finance themselves.
Yeah.
Uh, if government takes the money, they will also take the 21%. They will also charge individuals. I just know 6 to 8 I had the tax for CPA, that this TCP, tax compliance planning. Yes, tax laws are strict even in America, but the thing is, the amount of tax they get from corporate and individuals is not a worry about them, because they have many resources, many sources of collections, and whatever they collect it from income tax is not the only one source. They have many, and in India and other things, we are worried about more about income tax only. Hmm. income tax, that too from individuals, honest taxpayers. Corporate, somehow they will escape in the name of corporate social responsibility, I did like that, and they claim lot of deductions. For individuals it's very strict in India. And in America, that the sales taxes are there, 50 states they collect the sales taxes. Then there is a property taxes, there is a gift taxes, then there is a estate tax law is there. In India, there is no gift tax, there is no other things. In America, there are a lot of avenues for the government to get the tax. In India, something they are only bothered about income taxes and GST now. Hmm. Okay. And in America, another thing is the states are self-sufficient. Federal income tax and also state income tax is there. You know that, you will study that in the regulation paper. Hmm.
Yes, sir, you told in the first day.
Yeah, there's a state income tax. Some states collect income taxes, and that is offset against the what companies pay in federal income tax. Um, so that is the nature in American business environment and tax environment. They are really not bothered about all this cry from internationally. Mhm. Okay, now for example, we were here, right? This example, right? uh, this example we are continuing. In moving average, this was the much. In weighted average, this was the thing. In FIFO, let's say number of units in ending inventory is 40, uh, and date of purchase, etc., they have given. 1432 it is becoming. um, so is it the same example we are continuing? No, no, this is different. Hmm. Okay, that means there is no beginning inventory, right? Uh, Ending inventory is 40. So beginning inventory they have given 2000. I think they are continuing same. Okay, 2000. Earlier question, just remember this table we are talking. Ah, beginning inventory is 100 into 20. Hmm. That is what they are talking about it. And 20, here they change the purchases, no? Okay, beginning inventory is 20. Purchases are these things. Uh, Ending inventory consists of 30 and 40. And purchases are under the old example 1060. 1060, we all know how much is that, 640. Uh, yeah, purchases 640 and 20. This is the same example. Purchases, there are two, right? 20 into 32 and 30 into 14. That is okay. Purchases is okay. Now, ending inventory, they have already calculated ending inventory, 740, 740, and ending inventory under FIFO consists of latest goods, no? Ending inventory is the latest purchase. So ending inventory 40, how they have valued latest purchase, March 1, 10 into 32, 320, and oh sorry, June 1 latest, no? June 1, 30 into 14, 420, ಆಮೇಲೆ 740. So once you remove that, cost of goods sold will be 2320. When we talk about cost of goods sold, somewhere we had the equation, no? beginning inventory, beginning inventory was 100 plus purchases 20 plus 30 50 minus sales 70 plus 40 110, so ending inventory is 40. Now cost of goods sold for 110, this is for 110 units. So ending inventory 40 consisting of latest units. Cost of goods sold 110 is for old units. What's the breakup for 110 old units? Old units means you have a beginning balance of 100 and yeah, that's it. Beginning balance 100 and out of 20 purchase on March 1, 10 are left in ending inventory and 10 comes. See, March 1, 10 no, out of 20. Sri Lakshmi, 20 you are seeing, right? March 1,
Yes, sir. Yeah.
20. 10 went to ending inventory and 10 will be in cost of goods sold. So this 110 consists of January 1, March 1, March 1 10 units into and 100 units into. 100 units beginning inventory was how much? 100 into 20. 100 into 20, 2000 plus 10 into 32. Yeah, 320. 2000 plus 320 is a 2320. Got it now?
Yes, sir.
So we need breakup, not only equation. What consists in ending inventory? Old units. What is the old units? Beginning inventory 100 and 10 comes in cost of goods sold. Another 10 goes to ending inventory. Uh, June 1 first 10, 30 and then March 1 because latest new units. When we compare LIFO periodic, if we take same uh, thing, beginning inventory 2000, purchases 1060, valuation of cost of goods, so ending inventory. Ending inventory consists of earliest purchases. Ending inventory is early old goods. Old goods means how many ending inventory? Ending inventory is 40, right? Old goods means January 1 from beginning balance 40 units. 40 into 20, 800. That is 800. Cost of goods sold, all these things, what is the breakup? Cost of goods sold is old items, new items. You have to go June 1, June 1 is how much? 30. 30, that's the latest June. 30 into 14, then March 1. March 1, the entire thing, no? Uh, March 1, June 1 is 30 into 14. March 1 is 20 into 32. 20 into 32. 640. Then January 1. January 1 out of 100, 40 is here. So 60 into 20, 1200. Is maths correct? Check. 1200 plus 640 plus 420. 2260. Matched, no? We are continuing
Yes,
same
sir.
example. We are continuing same example. Always, when you practice, make sure that you are going with the equation always. Then this topic will be in the grip. First of all, no need to remember, by logic only you will get it under FIFO. Um, First thing is, I always believe that no FIFO. When I ask in the classes, students say FIFO first in first out, sir. Okay, first in first out, sir means what the meaning, real meaning? Uh, Real meaning is, ಫಸ್ಟ್ ಗೂಡ್ಸ್ ಪರ್ಚೇಸರ್ ಸೋಲ್ಡ್ ಫಸ್ಟ್. ಅದು ಹೇಳಲ್ಲ ಕ್ಲಾಸಲ್ಲಿ ಅಲ್ಲ. ಹ್ಞೂ ಅಬ್ಸರ್ವ್ ಮಾಡಿದೆಯಾ? ಹ್ಞೂ
Ah, sir.
ಹ್ಞೂ ಮ್ಯಾಮ್ ಫಸ್ಟ್ ಇನ್ ಫಸ್ಟ್ ಔಟ್, ವಾಟ್ ಇಸ್ ದಿಸ್ ಯುವರ್ ಆಸ್ಕಿಂಗ್ ಅಂತ ಆ ಥರ ಮುಖ ಅಲ್ವಾ? ಹ್ಞೂ
Yes, sir.
ಲಾಸ್ಟ್ ಇನ್ ಫಸ್ಟ್ ಔಟ್ ರಿಯಲ್ ಮೀನಿಂಗ್ ಹೇಳೋ ಅಂತ ಅನ್ಬೇಕು, ಗೊತ್ತಾಗಲ್ಲ, ಅಲ್ಲೇ ಸ್ಟಾಪ್ ಆಗಿಬಿಡ್ತಾರೆ ನೋಡ್ರಿ. ಹ್ಞೂ ಅದು ಅರ್ಥ ಆದರೆ ನೆಕ್ಸ್ಟ್ ಜರ್ನಿ ವಿಲ್ ಬಿ ಇಂಪಾರ್ಟೆಂಟ್, ಈಸಿ. ಆಮೇಲೆ ಯಾವಾಗಲೂ ಬ್ರೇಕಪ್ ಮಾಡ್ತಾ ಹೋಗಬೇಕು ಇದನ್ನು. ಆಮೇಲೆ ವೆನ್ ಎವರ್ ಯು ಪ್ರಾಕ್ಟೀಸ್ ಫಾರ್ ಈಚ್ ಸಿನಾರಿಯೋ ಯು ಮಸ್ಟ್ ಪ್ರಾಕ್ಟೀಸ್, ಎಸ್ಪೆಷಲಿ FIFO, LIFO. Weighted average is easy. Weighted average is, there is no order. You mix everything and come to the weighted average price. ಇಲ್ಲಿ ಮಾಡಿದ್ವಲ್ಲ, that is the easiest one, mixing of everything. But weighted average, FIFO, LIFO, uh, anything is followed in America. Moving average is also followed. Like when we talked about moving average, ಅಲ್ಲಿ ಇಲ್ಲಿ ಕೂಡ ನಾವು, ದಿಸ್ ಈಸ್ ಆಲ್ಸೋ ವೆರಿ ನೈಸ್ ಮೆಥಡ್. ಇಟ್ ಈಸ್ ಮೋಸ್ಟ್ ಸೂಟೆಡ್ ಆಲ್ಸೋ ವೆನ್ ವಿ ಟಾಕ್ ಅಬೌಟ್ coming to the, at each layer we are going to take the cost per unit, average cost, and comes. So the summary is that when you put a summary here now, before we go for, there is one more thing in CPA, is that LIFO perpetual layers you will do. It looks like a moving average, but it is something different. um, so now let's tabulate this. Maybe tabulation is already there here. Yeah. So we talked about moving average, ending inventory so much, cost of goods sold so much, weighted average, FIFO, LIFO periodic, just now we did. Now LIFO perpetual. LIFO perpetualಗೆ you have to do some layers. It looks like a moving average, but I'll show you once we do it what is exactly difference between them. It looks like that, but the valuation will be slightly different. Now if you observe this table, you will say valuation will be same under periodic and perpetual LIFO, but the way you arrive at it, it is in LIFO perpetual you have to make, it's called LIFO layers. Periodically we mix everything, we just and here you go with the line by line item, but at the end of the day valuation will be same. So for example, January 100 into 20, 100. March 1 we purchased 20 into 32, cost of the 640. January layer you keep it separately, and March layer you keep it separately, and you calculate 2640, and you are also adding the 20, 120. Now, when you see this in moving average, moving average, what is happening? We are adding 2000 plus that 640, 2640, and we are adding plus 2120. But the problem is we are taking cost per unit. Hmm. In LIFO layers, we are not arriving average cost per unit. Are you observing? There is no 22, right?
Yeah.
2640 divided by 120, we are not doing it. Hmm. When we go for again April sale, now you see the beauty. April sale is 70. Hmm. Now, what is that 70 consists of? One is we are taking this first layer, the latest layer 20 into 32. Because under LIFO, what is the ending inventory? Uh, Whenever we are selling what? Hmm. We are selling the new item. Hmm. So, new item means first we are finishing this layer 20 and balance 50 from the January 1 layer. This is March because sale consists cost of goods sold for new items. So, this is March 1 layer, and then this is January 1 layer. So, like that, we are going 20 into 32. We finish this one now. With this sale, we finish this completely, and out of 100, we finish 50. So, what is left now? January 150 is left, correct? And
Yes, sir.
minus 70, 50 is left now. For 50 layer, January 1 layer is thing, because inventory, ending inventory is old items. Cost of goods sold is new items. 50 layer. Next, one more purchase happens June 1, 30 into 14, 420. Now we add that to here. January 1 layer 50 is there, then June 1 layer is comes here, and of course plus 30, that will become 80. October 1 sale now. October 1 sale, this is June 1 layer we will sell first. 30 into 14, 420, and then since we are selling 40, again remaining will be from January 1 layer. January 1 layer 10. Hmm. Now, what is left in January 1 now? Out of 50, so 80 minus 40 is equal to 40, but out of 50, 40 is left. 40 into 20, 800. Hmm. Now, if you go back to LIFO periodic, what we did same thing, no? January 1 we arrived at directly 40 into 20, correct?
Yes, sir.
Here we are going to mix everything and arrive at the breakdown. Here in perpetual, because perpetual continuous updates are happening. LIFO continuously the ending inventory becomes old item, and sale will be the new item, and this is the most suited for what you talked about, perishable item. Perishable items you have to sell latest first, no?
Yes, sir.
Supermarkets is the classic example.
So in LIFO, periodic and perpetual, sometimes the values that we find, it will vary, no sir, according to periodic and perpetual.
I have rarely seen that. In FIFO, uh, it may vary, but in LIFO, I have not seen. You send me where is the example where it will vary.
Okay, sir. I think I've seen this in Hawk textbook.
Great fellow.
So they have told that FIFO, when it comes to FIFO, periodic and perpetual, it will remain the same. Any way we calculate. And LIFO, according to layers of liquidation which we follow, no, sir. According to that, sometimes it may vary the accrual.
Really?
Okay, I will send you a picture of that, sir.
To be honest, no. Uh,
Yes, sir. January 1 and March 1, we will directly take 120. But in perpetual, when we calculate, we will come to know that this 100 sometimes it has reduced to 50, and later we have in inventory some other goods. So, in that situation, it will be possible, no, sir.
but to do one thing,
Yes.
same table you try to do. We have done FIFO periodic, no?
Yes, sir.
Same thing you do FIFO layers. Let's see.
Okay, sir. Sir, in FIFO layers will not be there, no, sir.
But how you do FIFO perpetual?
FIFO perpetual also somewhat similar method only. I will take this example and I will calculate four methods also and I will send you, sir.
Yeah, send me. So
Uh,
what you are telling is FIFO will be same, LIFO will be different.
yeah.
Maybe what that fellow is telling, uh, why it may happen, I'm just thinking.
Yes, sir.
LIFO is maybe highly, it is LIFO is, I know it is highly sensitive uh, when you will purchase and sell. In FIFO, it is not a botheration there. Um, because what happens in FIFO, since you are always selling the old items first, huh?
Yes, sir.
It doesn't matter. The oldest goods are available at the time of sale, no? Yeah?
Yes, sir.
Maybe that is the rationale behind it, what he is talking about it. If you do FIFO perpetual, why they have not done FIFO perpetual here?
The same reason I think, sir.
So that means in going by your logic, FIFO perpetual should.
Give the same answer like FIFO periodic.
Okay, but then the LIFO perpetual we are doing right now.
Yeah.
Why it is giving same answer then?
Sir, here if we see in our ending inventory, there is 40 units of goods.
Okay.
So if we take any inventory value that is higher than 100, according to me, then it will vary, sir.
Mm. Higher than 100 in the beginning balance.
Yeah, if it is any inventory higher than 100, for example, 110, if it is there in inventory, then valuation will vary.
See, he is telling same thing what you are talking. The results of the LIFO method under perpetual and periodic systems are the same in this
In this
example, but may differ in other situations. They are telling, no?
yes, sir.
What is the other situation now? You said if it is more than 100.
Yeah, if it is more than 100, chances are there, sir.
Okay. Here also they are telling same thing. Then whatever Sri Lakshmi is telling. Hmm?
In Hawk, it is given, sir. So I remember I told you.
In the real exam questions, you faced any issue on this?
No, sir.
They don't ask no in CMA.
They don't ask much.
Hmm. Hmm. So what is that other situations we have to see?
Yeah.
And one thing is they may differ on only one possibility, timing of purchase and sale. For
Yeah.
example, here there is a continuous purchase and sale, and there is a ending inventory is always some balance left, no?
Yes, sir.
If there is no ending inventory, yeah, in that case again you have to purchase and then create a layer, no?
Yes, sir.
Maybe or shortage of ending inventory at the time of sale may lead to that different situation.
Yes, sir.
See, you don't have ending inventory right now. Let's assume in between,
Yeah.
hmm?
Hmm.
In
Yes, sir.
between during the year. Uh, then I agree that LIFO perpetual and LIFO periodic will not be same, because
Yes.
here there is a continuous flow is there, always there
Yeah.
is a ending inventory. Yeah,
Yes,
that
sir.
is why layers are you can construct. Hmm.
Hmm.
Uh,
When it completely liquidates, then we should purchase newly.
New, or there is a shortage. Uh,
Yeah.
for example, you want to, let's say, here completely you sold. Hmm. There is 120, right? Huh?
Yes, sir.
There is 120 and your sale is more than 120.
Yeah.
Then I agree. A sale is 120, more than 120, let's say 140. Hmm.
Hmm.
That
Yes,
means
sir.
120 you have to liquidate and 20 you have to buy now.
Yeah. Again, we
Maybe you
should.
will buy another 100. Hmm.
Yeah.
In that cases, yes, possible. But FIFO perpetual, how it happens then in that
It
case?
will lead to same results, sir. According to calculations, okay, we will do in this example only, sir. All the four methods we will do and we will check.
Yeah, I'll send you all these screenshots. Uh,
Okay, sir.
do
I will
it.
solve and I will
Yeah,
send.
you solve and send me. Even
Okay, sir.
it's a learning. But
Yep.
what I have seen is that maybe I have not come across other situations. What I have seen is generally first thing is first. Perpetual and periodic are both applicable for LIFO as well as FIFO. Hmm?
Yeah.
Uh, the results, generally what you are telling is FIFO periodic, FIFO perpetual will be same, but LIFO periodic and LIFO perpetual will be different in certain situations. What is that certain situations we should understand? What I am going to get here is when in between the layers you may end up, you may liquidate ending inventory, or you may have a insufficient ending inventory at the time of sale. Then you have to buy new. Huh?
Yes, sir.
That might be an issue. Very rarely I have seen. Uh, Very rarely I have seen. I have not come across. But yeah, solve this question.
Yes, sir.
Right now it is coming same, no?
Yeah, right now it's same.
It's same. Then how do you solve now?
I will take one more example, sir. In Hawk, it is there,
Mm.
and I will
You
solve.
take Hawk example and
Yeah.
present like this. Present like this.
Okay, sir. Yeah.
And send me one PDF.
I think they have only solved for every method, sir. I'll check once and I will send it to you.
Check that and only send me that PDF. Hmm?
Okay, sir. Yeah.
But as far as me is concerned, on CMA